The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to have Norm Winsky from Astro Trends on tomorrow as our guest. I'd like a special request today is our good friend Rich Anderson is spending the whole week with someone very dear to him that is going through some really severe cancer treatments with the radiation and chemicals and stuff. So send out some white light to our good friend Rich Anderson and his friend, because this is pretty serious stuff, and I know it takes a toll on not just the person themselves, but all the family members. So let's kind of do that. Let's move on to the markets here. The first thing we always check on, of course, is the DAX index. That's the German S&P. And if you'll take a look at this, you'll notice that we did complete the really nice ABCD pattern down here on Thursday, like we did everything else, just like we did in the E-mini, just like we did in the NASDAQ, and also the New York Stock Exchange Index, right at that area of 2115 in the S&P. We hit it several times. But let's take a look at this DAX, because it's telling us something. You'll notice here over the last day, we've been able to back off to the 61% retracement twice, and that is held. Now, the reason why there's a good probability of a rally here, there's several reasons. One, we have pattern confirmation that we're going to look at as we walk through some of these charts. That's the main thing. The second thing is we had one of those P index days, Pesavento index days, that Steve Rhodes always looks at, and also I do too, because that's when we have the least number of cycles at any particular time. The third reason is we have a new moon yesterday. So all of this should tell us that we should be ready to have a rally. Now, does that mean we're going to have a rally? No, it just means there's a high probability of having a rally here. That's basically what we're looking at. If we break this down and take a look at a couple of these indices, we'll look at the S&P index here first on the daily basis, because I think this gives you a pretty good idea of the pattern that we're looking at here. You'll notice that bottom of that triangle that you're seeing there from that started in late August to where we are right now. We have hit that very strong down support line 3 times now, and it hit it spot on until we break below that, and that would be below 2113. That's only about 12 to 15 handles from where we are right now. If we break below that, then that tells us that we certainly are heading down to that next 61% level, which is the level of 2070. Now, I had several emails over the weekend, especially on Sunday, regarding about how the news that's going on with the Circus du Soleil that we see on our news all the time. Folks, I really don't know how to interpret any of that stuff. I frankly don't know how to do it. So all I do is look at the patterns, because when you're looking at the patterns, you're looking at the sum total of all the buyers and sellers. That's pretty much the bottom line of what you're looking at. So just keep that in mind, that what I do is pattern recognition, and what I try to do is to, mark it so that I'm able to see, certain things on the patterns that give me an idea of where I think things are going. And they're only probabilities. If you remember that, you'll be far better off. Now, one other reason for a potential rally here, and we'll put this up so that you can take a look at it. And I just need to do something really quickly here, and that's going to do it right now. You'll be able to see this is the Bradley index, and as you can see, we're in this area that goes all the way out to, you'll never guess when the high is supposed to be. You got it, November the 8th. So whether, we know something big is going to happen on November 8th, but we just don't know, what it's going to be. So we need to watch this date. My assumption is, given the fact that we're losing volatility in the market, my guess is that we're getting ready, to look at something that could be, very, very interesting, come next week. But right now, I think we're just going to be in a real quiet week. But boy, all this can change by any of the news announcements that come out of wherever. So these, in fact, one of the things I did this week in the newsletter was started by the old Chinese curse, may you live in interesting times. And then I find out from some of our smart people here at TFNN that were nice enough to let me know that that is actually not a Chinese curse. It's actually an old English curse going way back to the time of the Knights Templar, and it basically means when you live in interesting times, they're putting a curse on you, and interesting times mean, you're going to go through, HELL. So you don't necessarily, when you see some of these things, I have to double check them anymore, because what I thought was a Chinese curse and what I've said for many years is actually not true. It actually comes from the English countryside, going back circa around 1200 AD. Okay, let's talk a little bit about what we were doing Friday before, when we were chatting with John Logan. Folks, this is what you have to see, because you're going to see what a bubble looks like. And this is a picture of an apartment that is being sold. It's a condominium. Well, it's not a condominium. It's basically an apartment. This is it's a 72 square feet, and if you'll notice, you can see the toilet and the shower all together there. And I've just been informed it's 166 square feet, so it's twice as much as I thought. I can't read the Chinese numbers. It's actually almost double what that says there, folks. So it's 100 and 100. Let's call it 170 square feet, and as you can see, it's selling for 150,000 US dollars. That puts it up around the $10,000 per square foot level. Here in Arizona, you can buy a house, a very nice house, for under $100 a square foot. So at 10 times, 100 times that, you're looking at something pretty significant. 10 times that. Anyway, let's the difference is, folks, Hong Kong is a very small group of islands. I think there's 25 or 30 islands out there, and the main population is about 9 million, very similar to what we have in Manhattan. So the problem is you've got 1.6 billion Chinese people that would like to get there, just so they have access to the rest of the world and a lot of freedom and stuff like that. So that's neither here nor there. But all I'm bringing you is to your attention here is because we were listening to Joey John talk about this with John Logan, to show you the differences in what happens across the world as far as how much people are willing to pay to live in certain areas. That's true of London, New York, and other places too. So this is just an unusual amount, I think, for a small place. So someone said their doghouse was bigger than that. Duffy, you must have a really big dog. That's all I got to say. I imagine it has a widescreen TV too. So let's just watch that. Let's get back to the markets here a little bit. One of the things that we want to see here is the we got to take a little break. Well, that's good.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and one of the charts that I posted into the room this morning is the one we were talking about Friday morning. That was the Australian dollar versus the U.S. dollar when it was trading down there at the 75.55 level. We now moved above $600 in profit in that if you happen to do that trade. So my suggestion would be to move your stop to break even. You could take profits here if you like, if you have multiple position, or if you just had one position. That's your choice, of course. But there's a possibility here, because of the way the dollar index is setting up, that we might have made a major top here in the dollar index. It's still a little too early to tell because we've had a pretty good run in this, and it looks like this is what it's doing is we need that dollar index for it to break out to the upside. You really need it to get above the 99.20 level. The 99.19 level was the level that we hit when it made the 1.27 expansion just 4 or 5 days ago. So what we're looking at now is a little correction here in the U.S. dollar index, and that correction could come right down to the old high that we made in July. If you'll notice the green line there, you'll notice that that's where the old breakout was to the upside. And if we pull back to that line, that would be 382 off of the low in September. So that would be an indication of something really important to watch as you go through and look at some of these things. Because many times old highs and old lows, what used to be resistance becomes support. So that's one of the technical things that you want to keep an eye on with the dollar. The advantage here is that you're able to look at the euro along with the U.S. dollar, because the euro is the mirror image of it. So you'll be able to look at that, very, very together. It gives you a little better indication of what's going on. If we take a look at the euro here, you'll notice this is what we were watching Friday, and you'll notice that we did have that nice move, and we've continued to rally a little bit here, but we did have that really strong thrust on Monday coming from some really nice ABCD patterns that were forming at that time. We're seeing the same thing, of course, in the Japanese yen and the Australian dollar, because they're all interrelated. That's not a big news feature, but this is a key level for sure. And believe me, we have these next 8 days are going to be probably it's going to be a toss-up on whether you can actually turn the TV on or not. But I try to watch as little as possible, but some of it is quite funny. But anyway, let's get back to the markets here. The Bradley Index, the problem we're having, folks, here is that we're not having any volatility at all. I mean, when this, by the way, but the announcement that came on Friday, I don't know if you folks had followed Dr. Al Larson, his Money Tides thing on Friday, but it was within 10 minutes of where the actual market turned down. There was a really strong lunar cycle that hit right at that within 10 minutes of that high, and of course the Dow dropped about 160 points, in a matter of about an hour and a half, and of course it bounced back. But the timing of it was absolutely spot on. I happen to be watching it because I like lunar cycles. I've been watching those for a long time. And I love Dr. Al's book, Your Electric Life. Boy, if you ever want to read a book that helps describe how some of this stuff really looks the way it should be, that's the book I would get. I think you can get it on Amazon. It's called Your Electric Life by Dr. Al Larson, and it really explains the electromagnetic effect of some of these things, and that's what's really interesting. But way over my pay grade, by the way, but it's something interesting. Now, we had a couple of interesting things to talk about today that someone's asked us about. In fact, two people did, and that is something we don't trade very often, but this is a natural gas contract. And as you can see here, we had the butterfly pattern form up here on October the 13th, which was also a lunar cycle. And as you'll notice, we had this big break. Now, what this means to me, and I'm just a technician, folks, what I'm looking at here is that the 61% retracement of the move from way back in February comes in at 2835 per cubic feet, and we're trading at around 312 right now. Remember, we came down from 360 to 300. We did that in 8 trading days. So for us to make another 30 cents to the downside is not a big deal. So my assumption is, and what I'm watching here in natural gas, I want to wait to see what happens if it gets to that point. Because if we get to that point, we're probably going to have some smaller patterns on the daily and also on the 4-hour chart that might pinpoint, a really good entry spot. And that's what I'm looking at in natural gas. I do not trade natural gas very often. Many people have told me I'm full of natural gas, and I'm sure they're correct, but I only trade it probably 3 or 4 times a year when we have major patterns. And that's the main thing that I want to keep an eye on, is when it gets down there another 30%, we'll see what's going on. There's a big difference, of course, in some of these options or contracts, because the seasonality of some of these things is really amazing. Now, someone in the den this morning posted a really nice seasonality chart on natural gas, showing it has strong seasonal probabilities to go down here until probably another couple of months, but that's neither here nor there, because that would fit in nicely with the pattern. If you're interested in seasonalities, folks, there is one guy who's by far, in my opinion, a good friend of Jim Twentyman and also myself, and that's Steve Moore out of Oregon. He is really, really good, and he's the best person I know as far as seasonalities that I've been following. Yeah, more MRCI. That's more research, and it's really, really good. Anybody, in fact, Mr. Z, I'm sure you use them as far as some of the things you're looking at. But he helps cover open interest and also some of the other things. Folks, I'm pattern recognition. I stick to these patterns. It's what's leads you to the promised land, and you can see what you're looking at here. When you're watching a pattern, you're looking at a bar chart, and it's a sum total of all the buyers and sellers. That's the main thing. Someone's asked the question, all I do is I look at the patterns of which, the ABCD pattern, the Gartley, the butterflies, they all fit together, and I look at the ratios and patterns, and when I see the ratios and patterns coming together, that's telling me that we have cycles that are due to change, and that's all it is. It's nothing else. Nothing more than that. Some of them work, and some of them don't work. That's the bottom line. Let's take a quick look here since we're talking about this, since we were watching the euro, and this is one that could be working really nicely in our favor that's due to finish sometime today, and that is the euro versus the U.S. dollar. If you'll notice here, on the 27th, which was last Wednesday, the market pulled back to a beautiful Gartley pattern at 0.3, as you can see. That was a higher bottom. It was just a little above, a little below the 61% retracement. And here's a perfect example. The difference between the 61% retracement and the 707, which it hit exactly, is 10 pips. That's only, it's only $100. That's insignificant for trading. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here. Someone asked us to take a look at sugar the sweet, so we're going to be watching it. You'll see here, as we're looking at these markets, the sugar market, going back over the last year and a half, you can see that 1.618 expansion that it made. What I'm trying to point out for you here is how you should look at the market as the next support. You'll notice that gap that was there at the 1.27 level. That would be logical support for sugar to pull down to, because old tops and old bottoms tend to be, support and resistance points. So that's a key thing to be watching as far as, when you're on anything. Doesn't make any difference whether it's sugar, or anything else. It's the same type of thing of what you're looking at. Now, one other thing I'd like to share with you, unfortunately, I'm not able to share everything, because we get to cover too much stuff. But I do want to take a quick look here at this DBA, which is a ETF for the agriculturals, and it has an interesting pattern here over the past several months, which tells us that we should be looking at lower prices in wheat, corn, beans, sugar, soybean oil, that type of thing, because you'll notice that it has that 135 pattern there where you have the 2.786 retracements. You'll notice the one at 0.5 was absolutely perfect. So that tells us that these cycles are, working nicely. Now, should this thing turn and get strong and get above the, the 2094 level, that's about 7% from where it is right now. If it were to do that, then this would be a breakout to the upside. But right now, you're in a downtrend. As you can see, you have lower tops, you have lower bottoms, and the good part about this pattern is the fact that you have some really nice cycles that are lining up to show you that the symmetry that we like to see is very, very important on what we're watching from that level. Now, we've had a request to take a look at, of course, one of our favorite things, and that is the gold market. We're going to take a quick peek at it right here. We're going to bring it up, and you'll see here. Remember, we have a new moon today, so this is, well, actually it was yesterday. So this could be a cycle high in gold that we saw on Friday. We're down just a little bit. I think we're trading at around 1274 right now in the gold. If we get above the 1286 level, then you've got a chance for a breakout. But, frankly, this market is really made a really nice bottom down there at 1242. We rallied $32 per ounce, which is just $2 off from the harmonic number in gold, which is $34, and we haven't gone anywhere. And that was nothing more than a 382 retracement of the high that we made on 0.5, which was, way back in early September. So this is what looks like is happening in gold. Now, the one thing I would look at is we had a $32 rally in gold. So I would be watching to see, if you get a nice $20 retracement there, because that would be a perfect 61% retracement. So you'd expect really strong support to come in on gold at the 1264 level. That's where I would be watching gold, 1262 to 1264. You wouldn't have to risk more than $8 an ounce at that point. But right now, it's just not having any power. It should have blasted off, much like we did at other bottoms, but we haven't done that yet in gold. So that's telling us that we could be, still in a downtrend and getting ready to break even further. Because if we get below 1242, as you can see here, you'll be looking at $100 lower in gold, without any trouble at all on a technical basis. And that's the key one to look at. Now, the I don't do the Russell, but I do the IWM, and I will bring that up here and show you here what we're looking at. This is the IWM. It's been much weaker than the rest of the market. We completed the big ABCD here in this. We did make a equal retracement in this IWM. If you'll look at this, you'll notice it made the 1, 2, 3, 4, 5 expanding triangle pattern up there. We presented that several weeks ago, and now we're making our retracement. And this is equal to what we did during points 4 and 5. In other words, we're seeing the same symmetry between 0.5 and where we are now as where we were, back in May and June, where we were making the retracement down to 0.4 or 5, where we, 4 to 3. You know what? I have these marked wrong, don't I? I'm sorry. Oh boy, senior moment. It should be 1, 2, 3, 4. I have 4 and 3 backward, folks. That's my bad. Didn't see that till just now. But the distance between 3 and 4 is equal to 0.5 and where we were Friday. So those are equal moves. It's another reason to say that we should bounce from here. Well, like I mentioned before, there's 3 or 4 really strong spots to take a look at from the long side as of Friday. So as long as that holds, that's okay. But we get below 2113, all bets are off, folks. That's not going to be a bullish. That's not going to be a bullish sign. So remember that's really what we're looking at. There's one other one that I wanted you to take a look at here that I think if you'll give me a second here, I have to turn off my limit minders are going nuts again. So if you'll give me 1 second here, I can turn this off and we'll be looking at it here very, very shortly. There we go. Boy, we're having some good moves. This is what we like to see. Okay, let's get back. There we go. We got it turned off. I want to show you a trade that looks very, very interesting. Whether it'll happen or not, have to wait and see. But before that, we've had a question about copper, and I want to put the copper chart in here. You'll notice that we've had a really nice higher bottoms here in copper over the past several months. And you'll take a look here. You'll see that we have a potential here to make the 224 per pound in copper. That would be the ABCD 78% retracement of the high. You'll notice we've had lower highs ever since October of last year, and especially since March. We've had higher bottoms and we've had lower tops. So we're in this really, really tight, pennant. So we'll see which way it breaks out, but there's going to be a lot of resistance in the copper at 224 to 225 a pound. Based on what the charts are telling me. Remember, these are charts. These are not fundamentals. Fundamentals, I don't know anything about, and I don't profess to, but I do understand the patterns a little bit better. Now, we've had a request to take. Before I get to that stock, just give me 1 second here, if I can find it, and I think I can. Just give me a second here. There we get. Okay. All right. Let's take a look at this one here. If you like pattern recognition, I think you're going to like this stock. Okay. We'll take a look at this here. As you can see here, look at Google here, folks, over the past 10 months. You'll notice that we have the butterfly pattern at the 1.618 level. Okay. Look at the potential for a double top here that we made on Friday. In other words, we came within $1 of the high we made last week during the time before the announcement came out about the FBI, and then the market broke about 20-some points. But look what's happening. You have a 1.27 expansion going back from last February, spot on, right to the tick. You have a 1.618, spot on, right to the tick. You got a butterfly pattern, and you got a double top. We'll take a look at this when we get back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, I posted the chart of the E-mini S&P. I know everybody loves to take a look at this, but as you'll notice that we've been in a downtrend, for quite a while. But over the last 5 days, you see we've made that ABCD correction, came within 1 point of the exact number. You can see the importance of 2113, because if we take that out, it's going to be very negative. Now, last night, if you'll notice here, there was a big gap down. We dropped more than 10 points on the opening Sunday night and stopped right at the 78% retracement, and then proceeded to rally all the way up to the 2131 level, which was a 78% retracement of the high that we made on Friday. It was also a 50% retracement from the high we made on Thursday, and it was a 382 retracement of the high we made on Tuesday. So that's the importance of 2130, because if we break above that, then you can see that the trend is probably getting ready to change. And I think we're in for a little bit of a bounce here for the reasons that I mentioned earlier, including the new moon. But if you'll notice on this that we do have really strong support coming in at around the 2120 level. That's the 61% retracement of the overnight range. So far, all we've been able to do is to complete that small ABCD pattern. So it's still very, very early, but 2120 is pretty good support in the S&P, and anything below 2112 tells us that we're heading down to below 2180 or 2080. So that's that would mean that this cycle just hasn't bottomed yet, possibly. But right now it's set up to, it looks like we're ready for a little bit of a rally. So whether that's going to be the case or not, we need to wait and see. Now, there's another one that looks really interesting, folks, for coming up here very, very soon, and that is the crude oil. I want you to take a quick look at this on the daily basis. You're going to be able to see it very easily. If you went down to a 4-hour chart and just blew up what happened from the August low to where we are right now, you'd get a clear picture that it looks like we're getting ready to come down. We're another $1 barrel lower, which we should be, but we should get another $1 a barrel lower from this down to around the 46.50 level, and that's what I would be watching very, very closely. This is December crude that we're looking at right here, but we could be moving into January. Either one of those are okay because they have very high open interest. But we did complete the ABCD pattern. You'll notice that it was within like these parallel channels that basically, show whether you're in an uptrend or downtrend. So there should be really strong support at this 61% retracement that'll come in right at the, I believe, 46.50 per barrel, about $1.50 from where it is right now. And the ideal time for that to occur, in other words, if you looked at the time cycle from the last move down, was 10 days, and that would bring you into early early next week is what we'd be watching if we were looking. Oh, we got a caller from one of our favorite people, Mr. Z. How you be?
Actually, you're my favorite person. Thanks for taking the call.
Well, thank you. Philadelphia is one of my favorite places, my friend. What can I help you with?
Yes, indeed. Thank you for doing the crude oil there. Boy, wouldn't it be lovely if this could pull all the way back to 43, maybe 39, but I don't have any confidence it gets there. I'm calling in to ask you about the S&P. Now, you've showed, thank you for sharing both the daily and the intraday charts on the S&P E-mini. And I wanted to refresh my memory and share with you what one of your guests, Kevin Murphy out of Tennessee, had shared back a couple of weeks ago on your show. And I might just ask as a sidebar, just a personal request, I would love to hear you speak with him again live on your show. But he had identified August 23rd for the Standard & Poor's as being a time target for a turn, potentially a major turn. Thus far, the S&P 500 cash had that high at 2193 on that day exactly. Mm-hmm. And I can't help but wonder if you think that is a sign that the trend is now down and that we'll be seeing lower lows and lower highs. Could you comment on that, please?
Yes, and I would like to remind everyone that Kevin Murphy has taken up the work of Bill Ehrman, who was I was one of his biggest fans. Bill never traded. He was a Harvard music major. His specialty was music, but he studied the markets for many years, and he came closer to finding what I think is probably the holy grail than anything else. But it's based on these relationships of ratios to sacred science, of which the Fibonacci sequence is one of those. But there's a whole bunch of numbers that come in along these times, and when he's talking about a date, he's measuring days. He's not measuring price. The price is secondary to the date, and that's why that August 23rd level, was, so very, very important. And I believe that is correct. I believe we are heading down. The thing that I'm watching, John, and as you know, that I'm just a technician, looking at price bars and stuff. I'm trying to see, when this volatility is going to raise its head, because it is going to raise its head, and it's going to be very, very volatile. Probably sometime after the election would be my guess. It may be even into the election, given all the different news things that come out. So his work is very good. I will give Kevin a call this morning, and we will try to get him on this week. He has some great stuff. I'm trying to, promote him to get some people to subscribe to his letter so that, he can pay his bills. Nobody likes to do this for nothing. But he has continued the work of Bill Ehrman, which is not an easy task, because he really did some sophisticated geometry and mathematical calculations. So I will do that. That's about I followed Bill Ehrman for well over 8 years, and there, when his work did not work, he would tell you right away. It was within a day or two. So he felt very strongly, but he did a great job of this. I happen to have a very good friend in London who's continued the work, but he's a private trader that doesn't share his information with the public. But Kevin is trying to, so I will get Kevin in the show if he would like to come on, and we'll try to do that this week. I hope that helps.
Yeah, no, I appreciate that very much. Just in closing, I'll share this with you, just my recollection of what Kevin had to say. I think it was like September 20th, 25th timeframe in there. So it's a while back. He had mentioned two dates further. One, October 10th, not for a turn, but for a top. And bullseye, that was a top. Following that, he shared November 14th, not as a turn, but as a bottom. So sometimes he identifies dates in the future which he suspects are turning points, be it highs or lows, and other times I've seen him state, hey, I see in a time in the future where I see a top candidate or a bottom candidate. So I am just struck by this idea that August 23rd is the S&P cash peak thus far. October 10th was a turning point top, and now we're left, at least with his work, with November 14th.
John, thank you for calling in, my friend, and I'll get back to you as soon as I find out when we can have Kevin on the line.
Thanks so much.
Thank you.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I just wanted to alert you that when we do these shows for pattern recognition, trade what you see, these are patterns. That's all they are. We're looking at bar charts. Our theory is that the sum total of all the buying or selling is contained within those bars. So if there's more buying, prices are going up. If there's more selling, prices are going down. So you're trying to determine what the markets are doing by that price action. And remember, it's all probability based. These patterns are not perfect. In fact, they are far from perfect, but they do work more than they fail, and that's the beauty of what we're looking at. Now, in closing here with these last few minutes, remember we had some really strong Astro stuff come in at the end of the week, along with the P-index, along with the Bradley model. We have the new moon, which was yesterday. So a lot of things are telling us that we should be, at a pretty good bottom. But if we get below, the 2112 level, and we're only 10 handles away in the S&P, and as you know, that can move very, very quickly. That's going to tell us that we are heading down, and it's not going to bottom probably until probably 2 weeks from now. That's a really strong probability. So a good support here, but the support can dissipate. And so you have to be very, very careful to look at it. As far as the Australian dollar, if you're still in that trade, either take your profits right around here, which is around $600, or you put your stop a little above where you got in, maybe protect $200 and then let it ride. I would suggest taking move your stop up to your break-even point so that you have a chance for a really large win if it does work. And if it doesn't work, you have break even. It's like taking your sister to the dance. It's a lot of fun, but you might not enjoy the music, but at least you're not going to lose anything. So make sure you try to, keep your stops as close to your break even point as you possibly can. That's the key that we're watching here as we go through some of these things. Now, tomorrow we will have Norm Winsky on as our guest at the half-hour break from Astro Trends, and he's done a great job. I don't know if you follow his letter or not, but he was 11 for 11 on his hits. So 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.